What's happening, everyone? Welcome back to another Sunday Scan. We have another special episode coming at you with a key guest, Gregg Sciabica. Gregg is an incredible trader. He has a very unique style. He's very thoughtful with his approach, and we're going to have a great conversation about the current market, some timeless principles, and we're going to do a deep dive into some trending stocks like BMNR. So make sure that you stick around to the end to hear the entire conversation. A couple things before we get going with Gregg is Traders for a Cause will be in San Diego, July 17th, and Gregg is actually going to do his best to be there for that as well. So that's a new piece of information that I just got. Before we get going, I'll do a disclaimer that neither Gregg nor I are financial advisors, and these are not buy or sell recommendations. Everything that we're going to talk about is for educational and informational purposes only. Now let's bring on Gregg. Okay, we are very happy to have the legendary Gregg Sciabica on Sunday Scan in person. Gregg, welcome to Sunday Scan. How you doing?
I am great. How are you?
I'm doing well. We're super excited to have you on.
I always thought you recorded these on Sunday. I did not realize you record them Monday nights. That's why so good. Like in hindsight, like you had me fooled. So this is really cool. It makes it a lot easier for me too.
Timing's everything with these. And I know, before we started rolling, we had Phil on last week, and he gave a great scan, talked about a lot of market concepts, and he mentioned something that really stood out to you. And would you like to share that?
I would love to. Phil, in that excellent Sunday Scan you did last week, I was listening to it, and there were a couple minutes in there where he was talking about his days, first year or two when he was, kind of dealing with the big volatile swings in his account. And I kept referencing something which, I haven't talked to Phil in a few years. I would say we're friends, but not close enough. We get along great, but I have not talked to him in a while. All of a sudden he starts saying, and it sounds like something like he must be inside my head, or we were just finished talking a day ago, because it was 100% something that I had relate to. Down to the exact words he was using. He kept referring to his fear of needing a real job. Like I had this fear, that I have to go get a real job if I couldn't succeed as a trader. I'm like, oh shit! Down to the exact words he was saying. I'm like, I have used those exact phrases in my head. When I would be going through tough times trading, like, and it's weird because it's like it's a legitimate fear, but it's not actually like this, like a fear of public speaking or fear of death. It's not like that horrible, but yet for some reason it is a huge motivator, and huge, like as in, I would put it as the top of the list. Like, what makes you want to succeed? What makes you put in all the time and the effort, and what drives you? And what's the thing that, really rocks you to the core when you're not doing well? It's like this horrible fear that, like, oh my God, I'm going to have to get a real job. It's so crazy, but yet it's true. And as we were talking, Chris, before we hit record, I think, even though most people, I don't know, maybe people do talk about it, but I don't think I've heard any other trader besides Phil actually say it so directly. But yet, I really believe if we were to like psychoanalyze traders, I think that fear is actually towards the top of everyone's list. It just doesn't sound very profound. It's like, you don't want to be on a on some forum like this, speaking to the public and admitting that, like, you don't want to sound like, it's like you have all these deep inspiring motivations, and like what makes you want to succeed. It's like, yeah, I just don't want to get a real job, but there's so much truth to it. So fear of a real job. I have to admit, I've finally gotten over that, because I think at this point I'm comfortable enough knowing that even if I completely wipe myself out financially, I think I'd be able to get a nest egg together and start trading again. And so I finally was able to put that fear lower on the list.
Yeah, definitely. And your trading style has always been so fascinating to me. I think it resonates a lot, and it has such a large discretionary element to it. And we were joking around a little bit beforehand, where it's like all trading has some degree of discretionary discretion to it. But the way that we were talking about it, it's like if you were to look at a spectrum, and on one end, it's like every decision is based on that in the moment, and then, if you went fully systematic where you had an algo doing everything based on very rigid inputs, that's kind of the other end. But discretionary trading from a place of deep experience where you're basically in tune with the market, and then basically, relaying that into all these different systems that you've built up over the years. It looks purely discretionary, but there's really elements of both styles. So could you talk a little bit about that style that you really have and that you speak about a lot?
Yeah. When I started many years ago, I my the whole thing I was working towards in for many years was trying to find really good, solid systems that I could reliably, make consistent money on. And while I was developing systems, yeah, I mean, I had some that, some levels of success, but even from day one, like, well, I guess, the very first thing I did, we would call it a setup, but it was essentially, the first setup I discovered was uh, derived from developing a system. I was trying to develop a system that came with some, which essentially what we call a set, because it was kind of more of just like a chart pattern, which is what we think of today. But but I was trying to find more of like the elaborate thing that you just hit the button in the morning and walk away and come back and. Um, but there was this continual pursuit to try to develop good systems that I could apply to different market environments, to different markets, to stocks, to indexes, all that crap. And so I just had always been researching and testing and just looking for things. And over the years, like a lot of those ideas just slowly, it's like you build up a mental library of like all these ideas. Like you test certain things which have some validity to them, but they only work in certain environments. So it's really hard to kind of really extract a good, a pure system out of it. But that like a certain type of thing works when you have certain types of market environments, or certain types of stocks, certain types of, again, we call it a setup, but in a system, a system is essentially just trying to find a reliable, consistent, a setup that's frequent enough so you could just trade off of it without much interaction. But yeah, to your point, you have all these ideas, and then sometimes, many times, you're trading and you see something, and it's not quite, a specific setup or a thing, but but you have these different elements from ideas which were tested or researched. They're not out of nowhere, and they just kind of come together. I mean, it's all. Um, there's all this talk about AI lately, and how amazing AI supposedly is going to be one day, but the human mind, even today, AI, who knows, it's going to surpass us soon, but at least for now, human mind is way more powerful than any computer, any system you can program. Like, you can come up with all these ideas of, that you would love to put into a system, but to define all these subtle little variables, which are there, and the human mind can detect them, and to evaluate them, and put value on, whether or not that you know makes it a good setup versus an inferior one, or whether or not it's the right environment to squeeze it out for maximum profitability or not, or whether or not you're in an environment where something that normally should work just fine is much higher risk in that particular setting. Like the human mind can take all that stuff and and really make split second decisions, which to define, whether you were just explaining it on paper or coding it into a computer is incredibly difficult. But yet, the human mind is a computer. I'm not talking about me. I mean, anybody. Like we process so much information, and a lot of it's just like deep in the recesses. It's not stuff which is just like front and center. Like, oh yeah, when I see this, I'm supposed to do this, but it just comes together. That's the discretionary part. It's not. It's not just like a gut feel in the sense of the example I guess I'm thinking of is you get these whether it's a trader or just a your weekend investor, the guy that just likes to trade or play short term, buy stuff short term, likes to play the markets, right? A lot of those types of people, at least what I envision, or I talk to enough people. I know there's some people that do this. They just look at stuff and they kind of develop this feel of like, oh, that looks like a good one. It's like, I that I guess you could argue is the most discretionary form of trading. Just, oh, that looks good. I like it. That's not really what it is. How we're talking about it. You and I are talking about it. That is not it at all. But yet, it looks like that. But what you're really doing is incorporating all these ideas, not just ideas, but you look at. Well, to do another callback to Phil, he made a reference last week. He claimed he believes he's probably looked at over 1 million charts by now. Boy, it'd be fun to have an actual number and like to actually know how many charts have I looked at. I don't know. Maybe Phil has. I have no idea. Maybe it is 1 million. Doesn't matter. The point is like that information is up there, and when you see a chart, if you've looked at 1 million charts over the years, somewhere deep in there, you've seen it before. And you might not be able to exactly articulate it or remember exactly where you've seen it, but it's like a database of sorts, a mental database, a library of information. Some of it's more defined setups and more specific. Other things are more just seen it before, and you have more of a sense of, what it looks like, what to expect, what the possibilities are, in terms of like when it works, it should look like this. When it doesn't work, it looks like that. And that's discretionary, but it's based on experience, research, and testing ideas, and on.
Yeah, that it's a perfect example. And we referenced before, like if you were to look at a bell curve of discretionary, on one end you would have like a total novice saying that, oh, that seems like it should be good, and so that's a form of discretion, like a very unsophisticated form. And then if you go all the way to the other side of the bell curve, where someone has been through hundreds of thousands of charts or thousands of charts and years of experience and intense studying and review, the discretion that comes from that side, it's really just whether it's conscious or unconsciously tying it back to all of the systems and the things that have been proven to work. And that's honestly a lot of how like Nate trades, that it looks like he has an individual read on every single stock out there sometimes, but it's really coming back to a couple of core ideas and just what form of this idea that I know inside and out is the manifestation of this thing that I'm looking at.
Yes, I agree. That's you articulate it very well, and that's really it is what it comes down to. Before you record, we were talking just kind of on a tangent, like the professional quarterbacks, calling audibles. It's in a similar way. Like they've seen so many different defensive schemes, and and they know their the abilities of each of their players on their team, and like who's capable of doing what, and they pull all that information together on the fly. Like I mean, each play potentially is very unique, but yet it doesn't mean they're just like making a wild guess. They're processing the information in the context of years of study and experience, and so it's discretionary but it's deeply informed discretion.
Yeah.
That's really, I think, the key is, where it's coming from is not, just kind of like a gut like feel of like, oh, I like this, I think it looks good. Um, if I was the quarterback calling audible, that would be the wild guess form of discretion. I'd be like, I don't know. It looks like there are more defensive players on that side of the field. I'll throw over here. Like it's like there's nothing behind it. Like I don't know how they adjust as soon as the snap is called, and all of a sudden they pick off the pass. Like no freaking clue.
Yeah,
Totally.
and I feel like so much of this too, it's the ability to prioritize information. And you've spoken before about when you've played around with developing more systematic models or things like that. The hard thing and the nuance is that you can have all the variables listed, but their value, the importance of each variable changes. And there's so many factors moving at the same time that really being able to prioritize information, whether it's through scanning of, what should I actually be looking for in this type of market, or with this specific setup of, okay, what is actually driving this setup? There's 10 things that are, associated with it. What are the 3 that actually matter and that would, potentially reverse it or totally change it? So could you talk a little bit about just the ability to prioritize information? And do you do that kind of consciously, or is it kind of unconscious?
Wow, we're gonna get like you're my therapist here, trying to figure out which things are conscious or not. Because like, man, that's interesting. It's probably a combination though. What you're describing, it reminds me of like if I'm trying to talk to a trader, whether it's a private, discussion, or I'm doing like something at Traders for Cause, and we're just talking about setups and stuff. We all know how it is. If you're looking on YouTube, Instagram, Twitter, whatever, you have these people that love to give you these super simple setups and the promise of look how easy it is to make money trading. Like, I just, this stock did this, and you could do what I do. And I can never relate to that because of exactly what you're saying, which is I could take a setup and try to present it to someone else, as in like, yeah, you can make money here, do this. But instantly I'll be like, oh, but hold on. In this environment, you need to be careful because, it could blow up in your face, go the wrong way. In this environment, you're just going to get chopped up to death because it doesn't really go anywhere. But in this environment, you can make a killing. And not only that, on this type of stock, it does this. I mean, and you just end up within a minute, adding all these layers of if and contingencies and this and that. And it's like, it gets very complicated, but again, to what you were pointing out, like, trying to, like, what are the things you focus on? How do you know what are the things that have value? On the one hand, you have lots of information, flooding into, a lot of it, tons of information you can process in the moment. And somehow in the moment, you can, I know I've been victim of paralysis by analysis. Like you just have too much information to the point. This is like, your head's all over the place. And, I think this is a good one, but oh my God, what if this happens? And, you're all over the place. But on the good trades, what inevitably is going to happen is you're going to, somehow hone in on the fact that despite there's a lot of information, there's actually usually just a few things that are going to dominate that particular trade or that setup, even though there's more information available, which on another trade or setup, there's particular information on this setup that you're ignoring because it's just not the dominating factor. Yet on another setup, that exact piece of information that you're currently ignoring could become the dominating factor. And like how, and filtering and valuing that on the fly, I think is one of the most important keys to, to being able to adapt and trade in different environments and to, to take your trading to the next level. When newer traders find a setup that they like and that, is working well for them, obviously that's, you need that. I don't know where else you're going to make money if you don't have that part. But to take your training to the next level, I think you have to realize if you could just filter out the bottom 1% of the times that setup doesn't work, the impact on your P&L could be drastic. It depends on your, obviously, your risk reward setup. Someone has a super tight stop, filtering out your worst 1% might not do much. But, if you're trading big or, taking on higher risk types of setups, you get rid of those big losses, and holy crap, the impact it could have on, your equity curve and your consistency, because obviously one big loss can wipe out, weeks or months of profits. Like, imagine just removing one of them. Now remove several per year of the really, really bad ones. That's potentially just as valuable, if not more valuable, than adding just a few more really good ones to your repertoire. So sometimes, those little things we're talking about, like learning how to identify, when are the which are the scenarios where something you like a lot, that you've been doing well with, doesn't work, and doesn't work in a phenomenally bad way. you know, um, one more thought to add to that. When I look at my biggest losses, one of the patterns which is very clear to me is that when I start initiating those trades, I mean, assuming it's like perhaps something that's more like a swing trade, hey, I mean, it could be anything, but if it's a trade that really gets out of control in terms of losing a lot more money um, than I thought I was risking, when I, in hindsight, look through what happened, essentially the mistake was I didn't identify one of the key pieces of information that should have steered me clear of it. So I was focused on the wrong pieces. Out of all the information, the two or three that I was focused on that I thought were, the dominating factors, were not the right ones, and I missed, in hindsight, the biggest one, which would have been the one to tell me to, get the hell out, if I was already in it, or steer clear. And I totally missed it. And that all comes down to filtering and understanding, which are the factors you need to be looking at. And, it's, so many of my largest losses over the years, like when I started the trade, it looked like a good one. It really did. It's not like I look back in hindsight and, and I don't know, like, so I look back in hindsight and just see some terrible, like just a gamble of sorts. It started off with like, oh yeah, this looks like a good setup, but I was just totally missed something that was happening that I should have been focused on, and was blind to it in the moment. So that's, that concept alone can add, just so much value to your profitability and success.
It's so important, and really looking at whether it's a particular stock or a move or anything. Like I'll give two examples. One of them, we recently had like a big run up in oil, and there was like Middle East headlines, and like there was these fears about them closing like key choke points basically for the supply chain of oil, and so like oil's running up on all these different things, all these factors. And then, if a trader is looking for like the mean reversion on something like that, it's really, I think, about identifying what was taking it up in the first place and then waiting for that key driving variable to be removed. And then when you had like the news that basically they weren't going to close that and do whatever, you had this giant mean reversion in oil. So that's one example. Another example, we've had some crazy low floats like BMNR that have been going crazy recently, and you have a confluence of factors like an extremely low float stock, so the supply is super limited, and then you have like a national audience paying attention to it and like buying it. You have people on CNBC, you have a hot theme, you have a bullish market cycle, And then you also have kind of a hot, short selling crowd at the moment where that can be very crowded. So you combine a low float, an in trend, an in play theme, and then you just get these crazy supply demand dynamics. And then, these things are up, 3,000%. But until one of those really key factors breaks, like unless, maybe they did an offering and that no longer makes it a low float in the same way, maybe that could be something that changes it. Or it could be, if everyone gets totally blown out and shorts don't want to touch anymore, maybe that's a contributing factor. Or maybe, they pivot to another type of strategy rather than the Bitcoin stuff. So there's these examples of these outlier movers and then these moves and then these unwinds based on very specific key things, and being able to identify those both on the way up and then looking for those to break on the way down. That's just a huge point of understanding supply and demand dynamics. And that's really, those dynamics coming together is what we refer to as a setup. And that just shows up on a chart some way. So when you think about setups, do you think in terms of supply and demand like that, or key driving variables, or a combination of all of them?
You don't need me. You can, I'll come back at the end. You know this, honestly, everything you just described is spot on. I swear, like taking everything you just said right now about, what's going on in this market and, the things we saw, BMNR and the oil and all that stuff. Now apply that to like what I'm talking about, whereby if you pulled up these charts a year from now, 10 years from now, and you just looked at them and you didn't, everything you just said is not on the chart. It's all this other information. And which of those things are actually like the main things that are, driving the price action in that moment? Because even day to day, those things change in terms of like, what's the driving force? What's, the thing that was making it move up yesterday might still exist today, but yeah, it's not in play today for some reason. It's such a fluid situation where you have to take all the information as you're describing. The way you articulated it, it's beautiful. I don't know. I should be asking you the questions. Because it's exactly my point. Like you look at the chart just by itself, and I could sit here and say, when you see this on the chart, this is when you need to buy it, sell it, whatever. No, but you need all that information, as you just said, and to understand it in the context, you're not going to be able to do it unless you're in that moment, absorbing all information and reading not just that stock, but everything else that's going on, in terms of the overall market and the mood of the market, the sentiments on, as you said, CNBC or like on social media, like all this stuff feeds in. And sometimes of all that stuff, one or two of them really become like the biggest factors that have just so much more weight than everything else that you need to understand that, and to be in sync to know like what's really that thing, so that way if it does change and shift and pivot, you're aware of it, and despite the fact that other pieces might still be in play that are bullish or bearish, that you can react because that, well, despite those other things still being present, this is the most important thing, and this is the piece that like with the oil example, everyone was fearful, I guess, of the worst case scenario. And as soon as you kind of have enough conviction or enough information to be comfortable knowing that, okay, the worst case is not playing out, it's time to to short these or whatever, you've got to be reading that market situation in the moment. And what was your question?
Yeah, well, we'll tie this into really like adjusting information on the fly, and then also just to tie it back to the previous point a little bit too, is that like you were saying, there's so many things, and that's the kind of the discretionary element to it. There's so many things that matter that don't necessarily show up on a chart. So people are looking at the 2-dimensional of the line on the chart, and that shows you some information, but there's also information that's not on the chart. And you're kind of known as a reductionist, where you don't have a bunch of signals and all these like different indicators on your charts, but you're taking into account so many pieces of information that are off of the charts. I just think that that's something worth really highlighting, because discretionary trading, it's taking as much as you can into account and then just processing it in a different way than someone who has many, many, many different indicators versus how they're processing something.
Right. I guess what's interesting about your comment there is, when it comes to reading the chart and, let's say being more of a purist with the technical setup, um, in regards to everything we're saying, in terms of like, what is the thing you're most focused on? Occasionally it is the technicals, which is kind of the irony is like, occasionally it really just does come down to that, like you can sometimes, and I do sometimes just trade purely off the technicals, but that's after I know, after I've kind of, again, put in all that other info to realize like that's the thing to be focused on in the moment, not those other things. But there are other times, that's kind of the whole, the whole, the cauldron of information, it's just, bubbling and, all this stuff's coming out of it, but yet somewhere in there is a trade that you can take. And so when there's a lot of information and catalysts of different sorts, that we're in this case referring to with BMNR and oil, I still think the chart and the technicals are important. But this is also a matter of valuing which is most important and how they come into play. But even when the chart is not the number one thing, it still adds value to very specific timing of your entries and exits. So I'm not, in this case, I'm not referring to timing like picking your entry and exit like as if you're not taking all the information. But so if the information is coming to that point of, okay, it's time to take a short position, well, just a very abstract hypothetical. If you have a trade on a stock, let's say, very generic hypothetical that, theoretically, this setup could profit $5 per share. If you improve your entry by 50 cents and improve your exit by 50 cents, you took your maximum profit, had you not maximized the entry and exit, you made $4 a share versus 5. So the chart still comes into play because, you need it all feeds in, right? So I guess the more granular you're getting in terms of like when it's time to place your exit and entry, then the more I'm going to hone in on the chart because, spotting support and resistance and the timing of, if you can see a trend breaking down and you're already heavily, bearish because of these other factors, that's also yet one more thing where, the different, the stars are aligning, you're taking in information from different places and when they all start pointing to the same place, that, it's just going to enhance your odds of success and your profitability. And likewise, no matter how much conviction you have, the chart is still valuable in the sense that it can give you the information of when you're wrong. You can be bearish as hell, but that stock's going the wrong way. You need to be able to figure out, like, if you're just in the last hurrah of a short squeeze, which is about to collapse, versus are you fighting a massive amount of momentum, which is just going to steamroll you. The famous GameStop. You could pick up a chart and say, like, theoretically, when that thing went from essentially over several weeks, but it went from like 20 to 500, depending on if you're looking at. I don't remember what the high was, but I know, like, pre-market or after hours, like it went above 500 at one point, and maybe the setup said it's a beautiful trade, at 120 or 200, but the chart could tell you to stay clear. At least it wasn't ready, despite all the information saying it was. it was going to work, and it did work, but the chart was telling you that there's more going on there than you might realize.
100%, and the chart giving so much, structure to work on. So it's not about one or the other. It's about just tying everything in and prioritizing it. And I'd actually like to. I'm going to pull up BMNR, the chart, just to really demonstrate one of the concepts that you were talking about, if that's okay, Greg. So
Yep.
basically, this massive move, and the part I want to talk on that takes into account some of the confluence of factors that we just talked about, and then also the chart. This area here where you obviously had a massive move up over a couple of days, major extension, but then you're starting to piece together, okay, you have those elements, the low float, the theme, the heavily shorted, like all these things. And then you get to an area like this where it looks like it's going to break down, but it just kind of goes sideways. And now a day goes by and you might start to have some T+1 kind of things going on. So you have it super crowded on the short side, still a super low float, still in theme, or still an in-play theme. And then you get to a technical area where it starts to break above these highs at that 62 level or something, and kind of using that as a guide of, okay, if it were to start to get above the average price that a lot of the people who are on the short side are participating in, that could potentially trigger using the chart and the timing a massive move. And that was something that we talked about in IU, and just seeing it play out. It's not just understanding the things that are off the chart. It's not just about us understanding the chart itself, but it's the combination of all those things. And that's really where you can get a setup where you can say, okay, I think I understand the supply demand dynamics at this point in time using this signal. And so getting very granular and just taking everything into account to really try to optimize any kind of setup.
Yeah. Again, yeah, I think you know, you're spot on, like really. So I couldn't agree more. All I could do is kind of, regurgitate very similar thing in the way I think of it, but it's very similar, which is like, you have, you have your whole, when things are playing out, you have your, um, all this information is like essentially like creating a story of sorts, a scenario. And if the chart is not following, the expectations that the information is setting up, like that is a very valuable piece of information because that's telling you that either you're missing something, there's something else going on, and it should be screaming at you that, when we're talking about like, what are the, um, of all the information that's out there, like what are the high value pieces of information, when that chart's doing something that's contradicting, how it should be playing out given what that's the huge red flag that's saying you're probably missing the most valuable thing. Find it, because as that stock started to, I mean, if you pull it up again, I mean, you could see pretty clearly there were some, I could see on there pretty much towards the middle range. It's a pretty broad area where there's clear support. Where it just, if you're thinking that stock's going to collapse. Now, granted, I guess that's probably after hours. You're not getting much movement, but nonetheless, you can kind of see how, if you're looking for that thing to collapse, yeah, right there too. You get that pullback right back to support. And then it creeps up, but then it makes another kind of area where it bases. It's like if you're short through that, you might still be right, but now you need to kind of be, more, as that plays out, just more and more aware that if you're wrong, it's not lining up with what you would want to see. And you need the chart to confirm your expectations and, and to confirm, if you're right about everything else that that up to that point, you should see something that confirms it, and that's doing, following those expectations. And if it's not, it's telling you that you're wrong, and you need to take a second look and figure out what the heck you're missing, because as we can see on that chart, it obviously did something which, if you were short, caused a lot of pain. So, we could have a very similar chart where, right before it made that huge move, perhaps, yeah, I mean, like, I could see a scenario on a chart like that where that third green bar, might have been the last hurrah, and then all of a sudden it just cracks super hard, right? So when it makes that move to a new high, you need to be, um, receptive to that information, very open to that possibility that you're wrong. And if you're wrong, like, you know, what what will tell you you're wrong versus what will tell you, just to hang on a little bit more because it's going to crack. And I mean, those in trading, there are so many moments when there is just the slightest change of, um, how you react to something that has a, you know, dramatic exponential result on your P&L. Like just a split second difference of get out now versus, I'll give it a little bit more, slight just change. And who knows, maybe you woke up in a mood where you were just, just in some kind of mood to just be aggressive. And you just had the sense of like, man, I'm going to go big on this one. I just really believe that, I'm right for whatever stupid reason, something just clicked in your head that was the wrong thing. I mean, the difference and, going from you could have had a profit had you just made a slightly different decision, and then it becomes a huge loss. Like those decisions are, to me in trading, that's one of those concepts. It's just no matter how long you're doing it, it's just so hard to appreciate how a split second slight change in how you approach, how you react, what you do can just be the difference between your biggest loss of the year versus, potentially even your biggest profit of the year. Because had you stepped aside, let it make its move, and then reshort it, like you go from enormous loss with a margin call and blowing up to taking a small loss and coming back and then riding, your best short, of your career, like just a slight change in your reaction and perception in that moment. Or, and this is like one of those other things as a trader, you learn the hard way, and yet even after you learn it, it's still hard to do it. The concept of reminds me of if anybody ever heard Nate's motorcycle story. Um, but I mean, it is so relatable. We've all had these, right? Where, if you were short that stock, I mean, my God, who knows what, you get up to get some food, go to the bathroom, and someone's ringing your doorbell. It could be anything, right? And then you come back to your computer, and now it's like, well, I would have gotten out, but I missed it. And now it's like, ramping up. Well, gee, I would have covered at, 80, taken a small loss and, lived to hammer it for a big profit later in the day or, the next day. And instead, now I'm underwater, this huge amount. And of course, under that immense stress, pressure, uncertainty, I mean, at that point, you're not going to make reasonable, rational. Your decision making skills are wrecked. It's like, you see that red negative number on your screen, largest loss of the year or of your life. Like it's easy, when we're just talking about like this to be like, oh yeah, even if you missed when you should have gotten out, oh, you still need to cover no matter what. I mean, your head's not going to be in space, and you're going to be thinking like, okay, you know what? It's horrible, but if I just wait a little bit, it'll be okay. It's going to come back, and then before you know it, the thing runs up to 160. Your broker buys you in, and you're screwed, all because you got it from the computer at the wrong time and you missed your exit, right? So, I've learned just like Nate, the hard way, which is, if you have a stock that's moving, you got a big trade, you don't get up. I don't, you don't take phone calls. Um, if you work from home, you got to make it clear to your family and to others that you're working. You don't get interrupted. You just don't, because that's the kind of stuff that could happen. Like you get from the computer just at the wrong time. You come back and and it's doing that. It is horrible.
Yeah. Yeah, absolutely. And then, really reviewing these moves after they happen. So even if someone's not super familiar with the key driving variables of why this happened, picking it apart, reverse engineering it, and doing all that work after you see that, and just doing it, week after week, month after month, year after year, I think that's really how people pivot from that one side of the bell curve to the other of, using that kind of discretionary style with them. So, Gregg, we're, getting ready to wrap up, but do you have any kind of closing thoughts or final pieces of advice or words for people kind of going into the next week? We've talked about a ton. I think it's going to be super valuable for people. But what would be your closing statements here?
I think a big takeaway from the last few minutes of this discussion is understanding the ability to change your mind on on the fly fast. Like do not get married to your position. Do not uh, you know get too cocky and confident, arrogant with the markets. Like I don't care how much you analyzed and researched this. When you're wrong, you're wrong. Like regardless of how that's part of the problem. There's a running joke with a lot of traders. Um, I mean, uh, the joke is like sometimes you research something too much, and the joke is like, oh man, I probably shouldn't have researched that one because it made you too, you got too connected to, you're convinced by your own research, which was actually correct and true. But the problem is then you missed the thing that you should have been looking at, even though everything you researched was correct. You ended up like, developing too strong of a bias. No, I don't actually think, researching something is ever bad, but it's a joke just in the sense like if you research something in depth, no matter how good your information is, you still need to be ready to adapt, flip sides. If you want to go long and when you're short, well, or vice versa, you know, you might be 100% right with your research, but if the chart says otherwise, the chart's right, not you.
Absolutely. And that it reminds me of a quote. Buffett once said that you can get into more trouble with a good idea sometimes than a bad idea, because with the good ideas, people are so convicted. They've done so much research. They're so into it that you can just get carried away. And, the chart is reflecting reality in that moment. And if you are ignoring reality, that's a recipe for disaster.
And that's, yeah. Again, that ties into the running theme of today. Like with all the pulling in all the information, knowing what to focus on. You're researching too much, you're starting to focus on the wrong thing because in the moment, none of those things are the driving dominant factor that the stock is moving on. But you're so entrenched in the theme that you've developed in your head that you become blinded to it. So understanding that in the end your research will still be adding a lot of value uh, to the trade, but the timing might be way off, and that's where that's the part that can be very challenging at times. Like you could be very right, but if the timing's wrong, it doesn't matter. You can still blow up your account.
Yep. And that's where that Forge fear of a real job can really come in. So hashtag Forge at the end of this episode. But Gregg, I can't thank you enough for coming on to Sunday Scan. It's been an absolute pleasure to have you. And I think people are going to take away a lot of your knowledge from this conversation. So thank you so much for joining us.
Thank you, Chris. I'm going to try to be in San Diego for Traders for a Cause. I'm hoping to see lots of people there. If anybody gets anything of value out of this, all I would ask is once you become successful and profitable, give something back to charity, because there's a lot of money sloshing around in these markets, and there are also a lot of needs in this world. So it only makes sense to give some back and help those others that aren't as fortunate as us.
Well said, and I totally agree with that. So with that, Gregg, thank you, and we'll see you in the market.
All right, Chris. Bye.
Thank you everyone for watching. If you want to trade live alongside me and other members of the Investors Underground community, then check out investorsunderground.com to see if becoming a member is the right decision for you. They have some of the best technology and a lot of great members there, all looking to help other people improve their trading. And also check out Investors Underground content on YouTube and Twitter. Thank you.